Okay, so today we're going to be doing another video, and this is actually going to be a video on a trade opportunity that I am currently taking. So just to start out with, this is going to be for educational purposes only. At no point am I going to try and use this video to try and convince you to take this trade or use it as something that could be a money-making opportunity for you. At the end of the day, that is completely your decision. But I am going to be showing you the tips and tricks and the points that have allowed me to get to this point of deciding that I would like to take this trade for my investment group. So just to introduce myself to you, as some of you know, my name is Morgan. I'm the founder of MS Equities Trading, and I train students in about 27 countries all over the world. I run a specialized online trading and investment educational academy, and I teach people about how to trade and invest. But something very important that I'm going to be showing you today is exactly how I identified a trading opportunity on gold. Now, to all of us, we know quite a lot about gold. Well, in a way, we think we do. I'm sure many of you have landed up seeing something like a gold piece of jewelry or gold watch. Maybe you own something that is gold. So we all know that gold has a high level of intrinsic value to a huge amount of people around the world. Now, in terms of gold and, with regards to the financial economy, people don't know too much about how gold is such an incredibly fundamental aspect of how our economy was built way back when, hundreds of years ago, sometimes even thousands of years ago. The first type of currency ever traded was technically pieces of gold. Now, today, fast forward all the way till now, we are obviously able to trade on the gold markets, and more specifically, trade gold against certain currencies. So if any of you are on your trading platform, I'm sure you can see the ZAU US dollar, XAU US dollar. That is basically the gold valued against the value of the dollar. That is going to be the asset class that we are trading today. So it's a derivative that we're going to be trading. And what I'm going to be doing is walking you through the top 6 points about exactly why I chose this trading opportunity and why you would be able to use it as an educational opportunity to learn a lot more about how to trade gold and how to trade commodities. First, one thing I did want to say to you is if you have not subscribed to this YouTube channel, please make sure to subscribe and also have a look through the video library. There are tons of educational videos for you to watch completely free of charge. For myself, I spend a huge amount of time giving you all of my educational information that I possibly can without taking too much information away from what we teach our students. Because with my training academy, I teach students over a 12-month training program, and we basically teach them about everything they need to know about trading and investing. But let's get straight back to the video. So basically what I'm going to do is just run you through the 6 main reasons why I've decided that this is a really good trading opportunity, and I'm going to be jumping between the charts and the camera, just explaining a bit about it. But these are going to be points that I think you are going to learn a huge amount from, and very valuable points. So let's get started on point number 1. Okay, so most important point, which I think is really the most basic point that I'd be able to share with you, is as we are on the charts here, you will see that I have got the main setup, the MetaTrader setup. Now, to any of you who want to get access to exactly what this MetaTrader setup looks like, you are able to actually go over to my YouTube channel and watch this video right over here that shows you exactly how you can set this platform up to look exactly like it looks on my computer right now. So if you want to jump over to that video, give it a watch, set up your platform like this, and then come straight back to this video. But what we are going to be doing is showing you the simple example of exactly what a historic support line is. So on this chart right now, we have got it on the weekly time frame. So as you would know, each candlestick represents 1 week. So this would be 1 week, 2 week, 3 week, 4 week, 5 week. And as you can see, as the candlesticks are moving, we see the flow of price action. So one thing I'm going to point out that is pretty straightforward and simple is a support line. And now a support line on commodities, I tend to find work incredibly well. I've seen many a time support levels on gold prices as well are seen to be trading incredibly well most recently. And if you actually pull it up right to the top here, you can see that it's trading directly within this range. So these higher price levels are actually levels that are traded way back when in 2017, even going back all the way to 2016. These resistance levels were levels that I definitely traded. And as you can see, going back, you can see that there is a very strong support area. So if I actually take just some colorful squares here, I'm actually going to make it a different color today. I think let's go with pink. I feel like it's a pink day for Sunday. Okay, so we are going to be putting rectangles right over here. You can see, so I am just basically identifying the points where I can see price action is testing the support level. And I'm just going to continue to put them here. And then I am going to move the last one right over here. So as you can see, we have got 1, 2, 3, 4, 5, 6 levels that are tested. Now, what you can see on this chart right now is if we look at the very first level, so I said there's 6 levels of support. You can see all the way back to around about the 21st of April, 2013 was when the first level was tested. And then you fast forward on the 1st of December, level number 2, 15th of May, 2016, there was another level tested. So between those 2 points, you can see that there is a huge amount of price action that actually falls below that level. Now that is obviously price going to an extremely devalued and undervalued level, but price has now continued to recover, but now has moved right back within that range, those 2 levels where price keeps bouncing in between. But as you can see more recently, you can see back in right in the beginning of 2017, that support level got tested again. And then in the middle of 2017, around about in August, the level got tested again. And then most recently again, the level has been tested. So between the last time the level got tested and now, almost exactly 11 to 12 months have been elapsed. So what we are basically seeing there is that price action has not most recently returned to this level, but this is definitely a very strong historic support level that we'd be able to use and reference back to as point number 1. Now, point number 2, as we go back onto the charts here, is going to be a very, very simple example, and that is the stochastic. Now, to any of you who don't know what the stochastic level actually is, make sure to go and have a look at this video here. There is a video up on my YouTube channel that explains everything to do with the stochastic and exactly how you can implement it into your trading routine to trade and invest and do a lot better with identifying overvalued and undervalued asset classes. You see, like I said, we've got an educational video up on this YouTube channel for every question that you have. But back on the chart. So one very important thing that I have identified is that the stochastic level is in that incredibly oversold region. So we're moving all the way down to the level 9, level 10 oversold region right over here. And this is where price action is showing in a correlation. So if I just take a simple vertical line right over here, we're going to be going with a red line. You can see how it correlates with the stochastic level way down over here. Now, if I take these support levels way back where I've put the pink lines again, and I just take the vertical line and I show you exactly where these levels are going to, you can definitely see that there are levels where the stochastic is moving into those lower points. But as you can see over here, these stochastic levels back in right in the beginning of at the end of 2017, the 12th, and you can see again in 2016, you can see that these levels are not really being tested incredibly well in the stochastic. But if we move these just a little bit to the left, you can see exactly how way down in these oversold levels right over here, how when prices move right into the lower levels of these stochastics, that price action has returned and actually recovered and turned into a bullish trend. So as you can see, if we just take some simple pink rectangles again, you can see I'm relying on the pink rectangles today. I'm just identifying those levels where we can see that the stochastic has recovered incredibly well. So if we just take a simple trend line and just show you by example, a visual example, how price action has recovered time and time again as the stochastic level has basically moved into that oversold region. So what this is effectively helping me identify is that on one indicator, the stochastic level is incredibly oversold. And historically, when the stochastic level moved into those regions on the weekly chart, that price action usually followed by recovering. Now, although this technically is a good point, it's only 1 point. And that is definitely not enough for me to say to myself, okay, I want to go and trade this asset class. which is why we try and list as many points as possible, which moves us on to point number 3, which is the MFI level. Now on the MFI point number 3, there is actually a video that we have uploaded talking exactly about how to trade this strategy. So make sure to go over to this thumbnail right over here and make sure to watch that video if you haven't, because that explains exactly how we use the strategy that I'm about to talk to you about right now. And it's on the MFI indicator. So what you're going to see right below the stochastic level, where the pink rectangles are, is the MFI level. Now the stochastic indicator and the MFI indicator calculate their values based on different metrics. So sometimes the stochastic can provide you an indicator that an asset class is oversold, but the MFI is not in the same level. And sometimes this means because there's a data discrepancy, meaning the data is not adding up, it's not correlating. So what we try and do is we try and wait when both indicators are oversold at the exact same time. And what we call that is a data correlation. That is where basically both indicators are moving at the same direction, but based on two different sets of calculation. So what that means is that the data is in agreement. And that is what we're going to show you right now. So as you can see on the chart, we have got on the MFI level, way down here, it is incredibly oversold. So you can see in this level, the MFI, I'm actually just quickly going to expand this for you just to show you very clearly exactly how the MFI level is shown. And I'm actually going to thicken the line a bit for you. There we go. Okay, so you can see way down here, the MFI level is extremely oversold. It's around about just below the level 15 level. And you can see that it has been in the oversold region for a long period of time. So if I show you the level that it's been oversold in, let's say, for example, it moved below the level 20. So we consider below level 20 as oversold. It moved below level 20 way back on this candlestick here. So it moved there, and then followed by that, there was 1 week, 2 week, 3 week, 4 weeks. So there was 4 weeks that that price stayed oversold in the weekly time frame. But most importantly, if we go back and we actually close these indicators a bit, because we don't need them to be so big. If we go way back when, and we actually move these lines, and we move them to where the MFI level was incredibly oversold or close to that oversold level, we're going to be coming up with some interesting metrics here. And what you're going to see is that these levels are showing us that price is extremely pivotable during these periods of time. So as you can see here, historically, the price moved all the way back down into this level, and I'm actually going to use my little drawing tool. So you can see right over here, price moved way back down into this level, extremely oversold. And what happened over here, you can see that price moved down into this level and then moved straight back up. And as you can see over here again, you can see price moved way back down into this level. And what happened? Price recovered back up. And you can see way back in this part over here, historically, price moved a little bit lower beyond that level, beyond this vertical line, but it's still followed by recovering. So what we can see using this simple indicator is that when price is moving down into these very oversold levels, the price action on the chart is recovering. So it's causing a pivot and it's recovering. Now, this is point number 3 because we had the historic support level, then we had the stochastic, and now we have the MFI level. But that doesn't mean that it is enough information for us to actually say, yes, this is a good trade, we should go and trade it. We should still try and add as many points as possible to prove to ourselves, prove the idea that this is a good opportunity to trade. And that brings me to point number 4. And point number 4 is going to be the Bollinger Bands. Now, Bollinger Bands allow us to see what the average range of price movement has been over a certain lagging period. Now, I haven't actually uploaded a video talking about Bollinger Bands, and at some stage soon I'm going to be. But on these Bollinger Bands, what I'm actually going to do is just give you a simple breakdown of exactly why I would actually use this as an example. Okay, so what I did was I cleaned up the chart completely just so I can show you the Bollinger Bands, and what I'm actually going to do is I'm just going to remove both moving averages over here so we don't have to worry about those. And what you're going to see is these black lines are going to be what we call the Bollinger Bands. So as you can see, this is a range of price movement, average price movement, that is showing us firstly the higher average of price action, the lower average of price action, and the middle average of price action. So these are basically showing me exactly if price is extremely oversold or extremely overbought at a period of time. And now what we can see in these levels over here is that when price usually moves into these higher or lower levels, so what I'm going to call these is piercing the veil. So piercing the veil means it's piercing above a certain limit. You can see that price action is following by retracing away from that level. And what this effectively allows us to see is that when price moves beyond these Bollinger Band levels, what is happening is that price is seeing itself as extremely overvalued or undervalued. Now, as we all know, as price rises and falls, it has to stay within a fair value area. But at certain periods of time, we can see periods of exaggeration. Now, what I mean by periods of exaggeration is when price falls way too fast. So what that means is that price is falling faster than what the market wants it to fall at. And that is where we identify what is overbought and oversold. Now, the Bollinger Band allows us to identify when price moves beyond that high or low average level, we know that it's in an area where the price should not be. The price should try and stay within those two levels. So we know if price moves beyond that level, it's either overvalued or undervalued, and there is a chance that price is going to retrace back into that range, that sort of tube of price movement that's moving on the chart. But we do have times where price tries to break below or above these levels and just continue to break out and keep on moving. Now on this chart, the thing that is quite interesting is that almost since 2013, we have not had a time when price action has tried to break below that level for a period longer than 4 weeks. So if you can see back on the chart here, you can see on this level over here, we had a candlestick. We had 1, 2, 3, 4 candlesticks that tried to stay below this Bollinger Band level. So I'm actually just quickly going to draw for you. We had this time right over here. I'm actually going to use a different color. Let's go with blue. So we have this level right over here where price tried to stay below that level, but then moved straight back up, but then rejected the level and moved back down. But what did we see? We saw price hit one of these rejection levels and recovered perfectly. So what we had is from the time that price broke below the level, price landed up moving back above to the upper limit of this Bollinger Band. Now we can see over here, there is a period of time over in 2016 where price stayed below that level for a period of 1, 2, 3, 4, 5, and almost for 6 weeks, but then recovered perfectly all the way back up above that level, moved a little bit back lower, but then recovered all the way to the higher level of that Bollinger Band. So what this allows us to identify here is that if we look at that level, so we had 6 times that the candlestick was below the level, what do we see over here? We have 1, 2, 3, 4, 5, 6, 7, nearly 8 times that the Bollinger Band has been broken by bearish candlesticks on the weekly time frame. Now this is something that you might think to yourself, well, this is quite an extreme exaggeration, but what are we having a look here? We're having a look at points of extreme volatility. What exactly does extreme volatility mean? That means when price action on a chart is moving far beyond a period of fair valuation. So let's say, for example, if price was supposed to be valued at 10, and for a period of time, price is supposed to rise by $1 every single week. But week number 2, price rises by $3. Week number 3, price rises by $5. And week number 4, price rises by another $2. So what does that mean? Over 4 weeks, price has risen by $10. Price was only supposed to rise by what? $4. So what does that mean to us? That means that price is extremely overbought. It's in a period of extreme volatility. And as we can see on the Bollinger Bands, that has confirmed once again on a 4th point that price is extremely oversold. So the 5th point of data is actually going to be a fundamental piece of data. And all of these pieces of data that I've been talking to you about is actually technical. But the 4th piece of data is going to be coming from the CFTC, and that's the Commodities Futures Trading Commission. So what the CFTC actually does is allows us to see what the commitment of traders is on certain asset classes that is a commodity. So if we're talking about natural gas, if we're talking about crude oil, gold, silver, copper, any type of commodity, they are able to show us what the net traded position is. So what the net position basically means is how many people are holding a bullish buy or an asset in that specific commodity. And now it's a little bit more complicated than that. I don't want to explain it too much. What I can recommend is that you go onto the CFTC website and read up a bit more about it. And what you can see here is that the speculative net positions that came out on Friday, the 10th of August, I'm filming this on Sunday because obviously the market opens tomorrow, and this is going to be possibly a big trading opportunity that I'm going to be getting into. But as you can see, the last release that came out was that the net positions was 12.7 thousand. So what that effectively means is that the current level in commitment of traders of speculative net positions is among the lowest in close to the last 15 years. So if you have a look on the chart now, way back when in 2016, the level that it moved down to was around about, I think it was around 10,500 positions. So what that effectively means is that the level of speculative net positions is so incredibly low that there are few investment firms and management firms that are actually holding positions in gold. But this is something that we can actually take advantage of, specifically because if we actually go onto this graph, and this is something I want you to do, I want you to have a look at this graph, and I want you to go and have a look at these extremely low spikes to see exactly what happened on the chart at that period of time. And I think you are going to be incredibly alarmed. So I'm going to be opening up a link on investing.com, and it's going to be in the description down below. I want you to go onto that chart for yourself and work out what point number 5 actually is. Point number 5 you're going to see is incredibly interesting and alarming, and I'm not going to explain it. And another one that I wanted to say to you is that on this actual trading plan, I have a total of 25 trading points that I've come up with of extensive quantitative analytics, fundamental analytics, and macroeconomic analytics that I have been able to gather on this single trade. So what I want you to do is spend more time trying to work out what the next opportunity might be, what the next point might be that you can add to this trading idea, and use it for educational purposes and see what plays out on this trade idea. So once again, everyone, I really enjoyed doing this video to show you a lot more about exactly how I trade commodities and trade gold specifically. Like I said, this is only going to be the 5 points I give away. I can't give it all away. I still have to keep some of this information for my students. My students pay me to learn about trading and investing. But to any of you, if you are interested in learning a bit more about trading and investing, make sure to head over to our website, www.msequitiestrading.com. There's going to be a link down below in the description, but what you'll see on the website is there will be everything you need to know about how we train students in 27 countries around the world, more about our online training platform, how we even have mobile applications that allow you to study anywhere at any point in time, as well as exactly what our course curriculum and our course syllabus involves. Once again, everyone, make sure to subscribe to this channel and click the like button if you thought this video was helpful, and I will see you in the next video. Cheers for now.